Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we are going to be looking at Norwegian Cruise Line stock. Someone recently asked me about this one, and every now and then somebody asks me about one that I have recently bought, and they managed to do that with this one. So I figured I would go ahead and bump this request to the top of the list and explain to everyone why I recently bought Norwegian Cruise Lines. As always, this is not individual investing advice. This is just how I analyze stocks. Okay, for those of you that don't watch all the way to the end, the strategy that I'm using to buy this stock really is designed to take small portfolio weighted positions. So this is going to be a 1% portfolio weighted position. So if you have a portfolio that's $100,000, then it would be like a $1,000 portfolio position. Not especially, I want to say this with this stock because it's going to be a little risky, especially with a deep cyclical stock like this that has quite a lot of debt. I just want to point out here before we get into it, I've been very bearish on cruise line stocks. I've kind of used Carnival as the poster child for this. If you go back to, so my very first, this was a sell article back in 2018 when Carnival was at its peak. And then this one was a hold, but these three have been sells ever since the pandemic started. And since this first sell article, it's down 76%. I kind of used Carnival as my proxy for all the other cruise lines at the time because Carnival was the most profitable and had the longest track record. I think Royal is pretty good too. Let's take a look at it real quick. I'm going to use fast graphs in this video. I do have a 25% off discount code link down in the description. If anybody's interested in trying that out for the first time, it can help with some of these visualizing the history. Now, Norwegian didn't have a long history, so I'm really using mostly Royal Caribbean as a proxy for it. Up until like last year, like a year ago, if you look at the stock charts of all the major cruise lines, Royal Caribbean, Carnival, Norwegian, they're very similar. The drawdowns are very similar. The performance is very similar. And if you go back, you can see the historical cyclicality. They got hit really hard during the Great Recession and then kind of slowly recovered all the way over time. This is Royal here. And then just got creamed, obviously, during COVID. So Carnival is similar. So Carnival is the one I traditionally tracked. Again, even a little more profitable, a little longer, slower down period, but then the recovery happened here until COVID, where they got totally creamed as well. So I'm using the history of those other two cruise lines, which go back farther, and using that as a proxy for Norwegian because it doesn't have as much historical data. Normally, I want 2 downturns worth of data in order to use the deep cyclical strategy that I'm going to use here. And I would say I'm making a little bit of an exception and stretching that strategy out a little bit because usually when I go back in time and look at previous downturns, I want to see like debt to equity ratio be similar to what it was in the past. And because of COVID, Norwegian and Carnival especially had to take on, they basically doubled like their debt because they were losing money like these years. So because there's kind of a reason for it, I'm willing to kind of let that go this time, but it doesn't stop the fact that this cycle is going to be different than the Great Recession, right? So you just have to kind of use a little bit of extra judgment on the end and apply that to the situation. So the real question here is, I'm not going to go through like the whole strategy, but the basic part of the strategy is if earnings go through these cycles, which you see here, if the market was willing to pay, if we go back like about $60 a share for Norwegian before the pandemic, and earnings were on this trend before the pandemic, I'm going to assume that it's possible for them to have their earnings recover back to these levels eventually. Now, I've been avoiding all these cruise lines because they got hurt so badly, and I had no idea how long it would take them to recover. I was thinking like 10 years, maybe, if they made it through. So if we look at the stock price, which is $16, and we assume that over time, usually I'm thinking like 5 years, it could get back to $60. Earnings could rise, and they could get back to $60 a share again, roughly. Well, what sort of return would I be getting? Right now I have a buy on this if it's under $20. So if it goes from 20 to 60, that's 200% return. So that's the potential reward. I would say the initial assumption I like to make is a 100% return within 5 years is good enough for me usually. But I think the extra enticement of this is if it does recover in 5 years, you could get a 200% return if earnings can get back up to kind of these levels that they were. So 100 to 200% is the upside. The downside, I think, is probably 50% downside. That would, if you look at the COVID lows, it was $7 a share. Right now it's $16 a share. So now it could always be worse than that, but really it hasn't traded lower than that since March 2020. So it hasn't even really gotten close. Like 1031 is the closest it's gotten. So to me, the potential risk, without like something bad happen that we can see happens, like we see it, we could trade out of it if we judged it was just going to be totally horrible, like another pandemic or something like that. I've gauged it about 50%. So it's a risky bet because you can lose 50%, and you have to just kind of accept that if you want to take a chance on the stock. The upside is 100 to 200%. So to me, that risk reward is worth it. And they are turning profitable. Like, they are going to earn money almost certainly this year. They just put out a release, which is what kind of spurred me to go ahead and buy it, where they actually said they were going to expect to earn a little bit more than what analysts currently expect this year. So that's good. And I think if they can kind of start a virtuous circle of paying down some of the debt that they had to take on and increasing earnings at the same time, that they should be able, as this kind of fast graph shows, to grow their earnings over the next several years and eventually get back somewhere in the range where they were before. I think the primary way that they can do that is just simply raising the prices, because there's tons of boomers and they have a lot of money and they like to cruise, and bookings are very solid. And I really think that they just need to they can either raise prices or monetize people more once they get on the boat. I think they should probably do both of those, whatever works, But I definitely think they can do it. I think the money's out there in the economy to do it, and the demand is going to be there for them to do it. And even if we have kind of a bit of a recession, I think the recession is going to affect people in the lower part of the economy more. Older, wealthier type of cruisers in the top third percentile of wealth are probably not going to feel it too much, and will probably continue to cruise. So that's my thinking. And then my somewhat evidence for the possibility of that is if you look at Royal Caribbean, which traditionally traded very similarly to Norwegian, it's had a full recovery off the bottom. Now, that which has been like 300%. Okay. Now they lost less money than both Carnival and less money per share than Carnival and Norwegian during the pandemic. They had to take on less debt, and they're becoming almost, their profitability and their earnings are rising faster, and they'll recover maybe fully by this year. So they were in a better position to begin with. But what we see is as long as Norwegian can continue to increase earnings, the market will almost certainly reward them the same way that they've rewarded Royal Caribbean, which is now making new all-time highs. So that's basically the quick thesis in a nutshell. And all these have, a tradition, history of recovering. Well, we don't have one for Norwegian from the Great Recession, but really, I think it's a decent bet for a small part of one's position. I also have quite a bit of cash I'm sitting on still. So, I mean, if I was fully invested almost, if I only had a tiny bit of cash, this probably isn't the thing that I would go buy. But I do think that at least the potential reward is there if things go right. And I think once they figure out that they can raise prices on a lot of this stuff, I think they're going to start making more money. And we pretty much see a bottom in with the stock price, and now we see earnings are actually starting to come back. And so I'm not expecting a fast. I mean, sometimes it happens fast if they surprise, but if it just happens the way that Fast Graphs is thinking, then with 30% growth or whatever, then they should be able to eventually come back over the next 5 years or so. Okay, if you found this useful, I haven't had a buy video for a month or two. And this one's it's going to be volatile and it's going to be a little riskier, but I do think the reward could be there, and I am long this stock. All right, if you find this useful, hit the subscribe button. I'll see everybody later. Bye.